Let's cut through the noise. This is your global market setup. US markets eased off, but the real focus is not equities, it's macro signals. US retail sales unexpectedly stalled in December after a strong November, raising questions around consumer momentum. That puts today's jobs report firmly in focus. A weak print could push sentiment deeper into the risk off territory as growth concerns build, while a solid number could help steady markets. Bond markets moved first. US 10-year Treasury yields slid 6 basis points to around 4.14%, the lowest level in about a month. Falling yields signal cautious positioning as investors wait for clarity on labor data. Equities followed that tone. Around 300 stocks advanced, but weakness in key tech names dragged indices lower. The S&P 500 fell 0.3%, snapping a two-session winning streak, while the Nasdaq declined 0.6%. AI disruption found its next casualty. Wealth management stocks sold off after Altruist launched an AI-driven tool that automates personalized tax strategies and client documentation. Investors fear automation could pressure margins, compete away efficiencies, and shift market share. These concerns build on last week's sell-off after Anthropic released tools automating work across legal services and financial research. Top executives at firms like Blackstone and Apollo are pushing back, telling investors fears of AI wiping out their businesses are overblown. Credit markets, though, remained wide open. Alphabet raised nearly $32 billion in under 24 hours to fund its AI ambitions, including record sterling and Swiss franc bond deals, plus a rare 100-year bond, the first of its kind from a tech firm since the dot-com era, with demand running close to 10 times supply for the 100-year bond. Disney also returned to the bond markets with a $4 billion issue, its first since 2020. On to geopolitics then. Now, Israeli Prime Minister Benjamin Netanyahu is expected to meet President Trump at the White House, pressing for tougher Iranian concessions. Meanwhile, in Europe, policymakers pushed ahead with the digital euro. Lawmakers backed plans for both online and offline versions to give Europe more control over its payment systems and reduce dependence on US players like Visa and MasterCard as transatlantic ties strain. At the same time, the EU moved closer to a trade deal with the US. The agreement includes a sunset clause, giving Washington time to cut its steel and aluminum related tariffs. If those cuts do not happen, Europe has signaled it may bring back trade levies. That was the global market setup. Stay sharp.